any session that you're trying to understand, interaction is important because questions allow you to think through processes. So I'm gonna have questions for you. Some of them are simple, raise a hand, and some of them might require you to ask a question or respond as you think. So first, before we get started, the title is real-time payments, faster payments. Show of hands, who knows what that is? That's what I expected. So out of the people that says they know what that is anybody willing to volunteer what their definition of what that is? Come on.
Just call on one.
It's okay.
Settlement under 5 seconds.
Good.
How's the settlement of the payment immediately?
Okay. Okay. Two things that had to do with settlement. Anything else? Irrevocable, that's a characteristic. Okay. All right. Okay. So it's important to understand real time, fully to understand what it's talking about. So does anybody happen to know who's involved in real-time payments? Huh?
I'll say every company out there.
Well, I'd actually argue not so much, but they might claim. But
The Fed, NACHA, people like Fiserv, people like ACI Worldwide, there's a lot of
so even on our board, or on our panel here, we have, basically Gail, and we'll go through introductions here shortly, but she's she recently retired from FIS, Treasury. We have IBM with Craig, and then the Federal Reserve. Now, when the names, it was just kind of thrown around, right? And you'll see things, companies and mainly a lot of banks that talk about it. You'll hear about the clearinghouse with RTP. People go, what's the difference in Zelle? And is that real-time payments? So those marketing comes into play. Sometimes it confuses the message. But do you see any characteristics of the names we're talking about? Very large stakeholders in today's business, right? Do you think they smell something? Or you think there's a reason why they're involved? It's because this is more than a payment type. This is not a payment type. It is really the rebuilding of our entire infrastructure into a digital infrastructure that is interconnected, has interoperability, and that it no longer is a single process of swipe a card, go to First Data, go to Visa, go to issuing bank, and come back. It runs all different kinds of directions. There is no defined issuance, no defined acquiring, even though that's the way we see things. So when you really think about disruption, what's happening is we're upheaving our entire ecosystem to rebuild it better. And that's what the Faster Payment Task Force was all about, hence the reason why the Fed's on the panel today. So I'm going to throw that out there from a thought perspective, because then when you think about characteristics of real-time payment, I think some of the names, comments had made. Settlement, quickly. Is it? Is it not? Where in the value chain of that transaction is settlement less than 5 seconds? Is it just from the feeling of the person that's using it, or that's sending a transaction like that, or is it all the way through the Fed level? We're going to talk about that and where we're headed. Is it characteristic? Somebody said non-retrievable, right? Or
Irrevocable.
Non-revocable, right? So what does that mean? One of the fundamental characteristics of a push payment or a real-time payment is it's a good funds model. Think Western Union. I walk in, I'm going to send Matt here $100, and I don't go, here's $100, send it to Matt, bill me for the $5 for the send it. No, you put the $5 down when you send it. You put the money up front is the bottom line, right? So instead of pulling from a negative in a debt scenario, you're actually putting the money up and sending it that way. So that creates a reverse negative flow, completely different than the world we live in. And so if you're forwarding any funds, because today it's the way we operate in one way. So there's kind of 3 stages that you'll see in our discussions. What we have today, how do we simulate maybe a real-time payment? And Venmo would be a good example of that. And then what is the evolution becoming, which is really the next 3 years, and then really after that, which is more the autonomy, the euphoria that people speak of when you think about instant payments and using the name as a descriptive. It moves from here to here, boom. What a lot of people don't realize, though, is there is a separation of your user experience and really what happens in the back office. So the payments people, they understand that. But 99% of the people in the world today don't have a clue. My mother yet understands what I do, right? And so it's just a matter of, but they don't need to know it. And the more and more you're in the payment industry, you realize that most people don't even have a clue. They just know they pull out something, they pay, they do what they do. They don't even think about it. It's a multi-billion-dollar business that nobody never heard of, really. They know brands, Visa, MasterCard. So from an introductory standpoint, let me introduce the panel. So first, I'll start on the FDIC side. Or FDIC, sorry. That was a
Different organization.
Yeah, the Fed side.
Okay, I'm Candy Alter. I'm here with the Federal Reserve Bank of Chicago, here in Chicago, and I run a little payments policy team. And I've been working most heavily in the last couple of years with the Faster Payments Task Force and the work that we've been doing around really getting the industry together to think about a new model for payments, real-time payments, but then also payments that are smarter and taking advantage of some of the technologies that we have available now. So I'll talk about that as we go on.
Excellent. Great.
Hi, my name is Craig Rector. I am responsible for IBM's Financial Transaction Manager platform, and what that is a platform inside financial institutions that actually process these faster payments along with the legacy payments as well. We're members of the task force as well. And as Travis says, is that it is an interesting reinvention of this entire payment space. And what I always say is that when you think about what real-time payments means, it's all the things that you describe. But this is a chance to interweave payments into the natural behavior and the user experience of folks making those payments. They don't want to necessarily swipe a card, or they don't want to necessarily log into something. Is that if you can do it as simple as tap a lapel pin, and we actually demonstrate this, is tap a lapel pin and say, hey, I want to pay Gail $200. Boom.
Make it $250.
Yeah. Yeah, yeah, or I should say, request a payment from Gail. No, I'm kidding. I'm kidding. But I'm responsible for the platform that ties all that stuff together.
And I'm Gail Angel. I recently retired from FIS, just shy of 40 years there. I was responsible for FIS's Commercial Treasury Solutions division, as well as some new and incremental growth initiatives. So commercial treasury included things like wire transfer, account analysis, multi-bank services, electronic banking. So if there was a B: involved in it, then it was of interest, and I have some knowledge about that particular situation. Had the privilege and the opportunity to work with hundreds of financial institutions, ranging from small community banks to the largest financial institutions, and a particular interest in small business, but also experience on the large corporate end of the marketplace.
Okay, excellent. So, something that Craig said, was just talking about the, build something on top of this environment, this ecosystem, or whatever you want to call it. So, to me, any panel, any discussion is helpful to understand. So, well, what are you here for? So, a lot of people kind of filled up the room a little bit. So, there's either a buzz or, is it, what are you looking to find? What I like to do is make sure everybody walks away with at least an understanding of something that they didn't when they came in. And maybe a clarity, maybe a better understanding. Sometimes it's just simple things like understanding the difference between banks and clearinghouse, talking about what does that mean when they talk about real-time payments versus when, let's say, Push Payments talks about real-time payments, or you talk when I mention acquiring and issuing, what does that have to do with real-time payments, right? So those clarities put things in perspective for you, right? So the key is that you walk away with something that you can make do with that affects your life in the future and make decisions that affect you to be more successful as time progresses, right? So this is not, a avocation of a technology type or, a style, whether it be blockchain or something like that, which tend to, talk about the approach. This is kind of the same thing, but connected to a legacy world that can happen today. So, and that does embrace the same blockchains and the cryptocurrencies and these other innovative opportunities that are there today. We work with many of those type of organizations to help them, especially get into sometimes regulatory framework if they choose to. So I have a question. I'm going to pick on somebody, and they're going to be get after me later. So Renee, why are you here today? What would you like to walk away with? Yeah.
No, I work for Citibank. Just simply looking to learn, observe what a lot of different companies, exactly to your point, think or want to do around instant payments. And I love a lot of the sessions, and I know representing the bank and bank action is a fun thing I personally enjoy. One thing that really puzzles me is why banks are not more involved in the entire discussion. Question was made in one of the earlier sessions, why are banks not doing anything with data? Data is being shared is a real valuable asset. The thing that vexes me is why does everyone want banks to data from banks as a consumer? You never want your bank to give it out. And yet banks are not allowed to profit from it, whereas everyone else is allowed to profit from data that they have. So we're having I agree with you, we'll be writing the rules of the road. And I think what we're trying to do is figure out what are those new rules of the road going to be, and how can it be a real ecosystem. Also, comments were made earlier on as well is the U.S. is not going to follow Europe with PSD2. I get it, I get the sentiments. I also think it's a great mistake. If we want to stay competitive, these commercial interests that come back need to be set aside because otherwise they get taken over by other bigger commercial interests.
Yeah.
Chinese companies are already bigger than the biggest banks here in this country. So either we come up with a good solution or stop and be bought and take them offline. So
Any
trying to
decision,
understand where the vision is going and trying to understand how we're going to create a new ecosystem. Because I think there's a role and a place for everyone.
okay, great, thank you. Any innovation is a decision to make. And so you can be Kodak or not. And there's tons of histories of examples of people like that, and they choose to stay the course. And we run across that a lot. Anybody else that wants to chime in with something that they really a burning question, so that the panel can also tailor to some of that context. Anybody else want to offer? That's very specific, and it's helpful to understand, I guess, is the dynamic between the banking side and I'd say other ones else. So first, let's talk about the evolution of, right? So where we're at today is technically in the U.S. there's no real what I would refer to as the end game of real-time payments. Because in order to do that, you need a 24/7 Fed that works 7 days a week. That's not the case. So I would, why don't you speak a little bit about, kind of the, we spent 3 years in a faster payment task force. We kind of set out guidelines. There was comments made to say, well, that looks like what we've got. How's that any different, right? And it was more of a guidelines of principles to follow. But one of the suggestions of that was that the Fed take an active role and they have to do something for settlement purposes, because in the end, somebody's left holding it if you don't. And today, the big banks are really upset about that. Even from a recent meeting I spent in New York, it was very boisterous about that liquidity position of banks. Again, so these are challenges that are happening as our adoption evolves, right? So let's first start with that.
Sure. So just by a show of hands, how many of you or have any of you been working with the task force, members of the Faster Payments Task Force? Okay, so a couple folks. And so I think what that represents or what that reflects really is what the Fed tried to do when we first initiated this process. There was a recognition of there is faster payments today. It's called cash. And, you know, that's easy, but if you're dealing electronically, if you're working in a world where your business is global, you know, it's not real-time payments. And so the recognition of the Fed was that we really needed to bring the industry on board and kind of catalyze around a vision and think about, like, how do we move to sort of the next evolutionary stage in payments? So not just incremental changes, but really what would we have to do to develop an ecosystem that would really support real-time payments? And so the task force came together under the Fed's sort of catalyst role and looked at a couple of models. We put it out there for the industry, task force members, to come forward with models of what a faster payments service would look like, so end-to-end payments. And I think your definition of, you know, settlement within under 5 seconds, things like that was debated heavily, as you know, just characteristics of what really even is a faster payment system. So first, this task force defined, I think it was like 36 criteria to articulate what that looked like, and then looked at some proposals for faster payment solutions. And ultimately, in the end, I think we acknowledge that given our economy and you know, kind of the scope of what we're looking at, there will be multiple faster payments providers operating in this ecosystem. And our job was to consider, how do we facilitate that ecosystem in a way that those solutions could interoperate? So a consumer or a business wouldn't need to have be on the same platform. You could send and transact real-time payments regardless of what platform is. So the task force really came up with some recommendations that they felt would help facilitate that. And they centered on 3 real categories. The first was around just coordination, governance. In order to do that, you'd need to have a body that would continue to facilitate that type of coordination. You'd have to have some rules and standards that would allow for cross platform or cross-solution interoperability, and then really look at the regulatory environment and where would we have gaps. Faster payments could also mean faster fraud. So where can we protect consumers and businesses there? The second category beyond governance was around really around infrastructure. And I think, to your point, Travis, the task force set up front, it had an actual recommendation that said the Fed really needs to look at what you can do to be the backbone and facilitate those real-time payments. So look at, can you provide settlement services real-time 24/7? So that was actually a recommendation. There was another recommendation around looking at directories and some other things that would sort of facilitate that interoperability. So infrastructure was sort of the second category recommendations. The third was really around sustainability and evolution of that ecosystem. So there was an acknowledgement that we did have a lot of legacy players, a lot of people on the task force who were very invested in, I think, systems today. There was an acknowledgement there was huge investment necessary to make this happen. And, how can we make sure that we continue to look at new technologies, look at, things like distributed ledger, things like that weren't called out specifically by the task force, but I think there was an acknowledgement that there are disruptive technologies that could really make some big advancements, particularly in the areas that the task force didn't feel that they could really address: cross-border payments, a lot of access to payments for people who didn't have, who were underbanked or unbanked. And so there was some promise that those technologies might help there. So the task force really came up with those 3 broad categories for what would need to happen to facilitate that type of ecosystem where independent providers could interoperate. So at the conclusion of that, the next step now is there's sort of a smaller group, a follow-on group, that's looked at developing a faster payments council in the U.S., and that was out for public comment over the summer. I think there's more to come on that. So the industry is looking at how do we create an existing council or body that continues this work for coordination. And then the Fed also is doing more work around what would we need to do to facilitate settlement and do some things that would really help support and ensure that ecosystem was real time.
So if you think about, even from the Fed level, if they were to settle constantly every single transaction, that means a 12 cents micro deposit, right? So, they have a lot of decisions to make about how it batched out, the timings of those things, 24/7 staff. Think about the 40 years of operational, compliance and auditing that is in place that now has to be tore apart and rebuilt, right? So it's a daunting issue. But at the same time, other areas of the world, everybody talks about LA Pay, everybody talks about, different countries and how they progress. They also didn't have a system. They didn't really have a legacy system. So, we've been rewarded from our system for many years, but now it's time to refresh like anything else. And so they're a little bit smaller footprint, a little bit more simpler to implement, but it always comes down to this, mandation. Why don't you mandate it, right? So, Craig, why don't you tell us a little story in Europe about a mandate that went wrong?
Right. Mandates don't always work well. If you think about nasty old checks, right? Everybody in this room is probably ready to get rid of checks. The UK was ready to get rid of checks, and so they mandated it. And what they found out with that mandate is 90% of all charitable donations in the UK were made by check. So they had to rescind that, and now checks still live. So caution is sometimes the right policy around that. But there's also positive examples of mandates as well. But you'll get a lot of innovation based on the results from the task force. And the participation in the task force is that I've collaborated with a lot of folks that were involved in that, and there's some innovative approaches that have come out of that, which is a credit to everybody who's worked on that task force.
Okay. So, the real issue is we're such a complex environment. It's hard to deal with. So it really has to be done by a consensus. So that's one of the things and not to advocate, but the task force was a brilliant effect from the Fed to come in and say, and in essence, they basically said this: hey guys, come in and help build this new ecosystem and help understand what needs to be done. You tell us what needs to be done, and oh, by the way, if you don't, we will do it. So, that little motivation helps us to step up and show up to the meetings. But it was a true collaboration. I've never been involved in anything quite like that. I used to call it the Fed-sponsored networking event. But it was really enlightening in many ways. But to move off the Fed side of it, just remember something what that means is somebody's holding the cash, or in this case, not holding the cash, and that negative liquidity is why the Fed's so important to that. Because if you think about the money that gets moved around, and people sometimes don't understand the levels that some of these banks are dealing with, and the positions they are taking in a risk position. And just to give you a little concept, in that meeting I referenced in New York, Walmart was there, and they were pounding the chest a little bit, but I guess you can do that when you, as he quoted, 200 million transactions, not volume, transactions a week. That's just like, that's a lot of transactions that they produce. So that's just a credit card process, that they're producing there. So buying power, obviously spoke loudly, but it also means that you're floating, because this is the whole thing of real-time payments. Here's where it's coming from, and here's where it's going, right? If you're promising somebody here they can have that money and they go out and do something with it and acquire and buy, and if that funds hasn't showed up yet, that's your negative liquidity position, right? And banks live by this, and this is what they've done for years, right? So this process actually eliminates that, gives it more, you might say more power to the bank, but it's more power back to you, because then you got delay and control involved. So, and I'm on purpose taking it from this I'll say institutional level, and I'm going to break it down to more of the application level here in a minute. So, but Gail comes from that treasury position at FIS that worked with banks from a treasury perspective, right? So, and there's two economies of the way it's working out. There is the banking side, and then there's everybody else. So let's finish off the bank.
Great. If I can go back to the question I think that Renee brought up, it was why aren't the banks more involved in the discussions? So I recently had some conversations with a number of regional financial institutions. These are good-sized financial institutions. I'm not necessarily talking community banks, a level of sophistication. And when I asked them what they were doing with respect to real-time or faster payments, the answer was pretty much not a lot right now. And there's a couple of reasons. One is they don't have the resources. In some cases, they would have to hire not one, but two product managers. And to your question with respect to approaches at City National, one of the driving factors would be, is this a business case that we want to pursue on the consumer side, or is this something that we want to pursue from a cash management or from a business perspective? The answer, however, the other most damning thing is they're not seeing demand, and these were typically folks from the cash management groups that I was talking to. They're not seeing demand from their business customers. So if their customers aren't clamoring for that and they have other priorities, they tend to be pushing this one aside, despite the mandates and the interest, in terms of modernizing the system. The answer, however, from the large financial institutions is radically different. Global banks are all over this. They've had to be. If you look at where the international scene is at, we're way far behind from the standpoint of our real-time payment systems. And particularly the top 10 banks are actively pursuing this. They have resources committed to this. They have active work underway. And if you have one foot in Canada, for instance, and one foot here, you are especially motivated to go after it. One of the large banks that I talked to said that they were in particular seeing a lot of increased consumer demand. And this is evident if you just look at the growth in things like Zelle. I think FIS banks had like 111% increase in 2017 in terms of P2P transactions. The problem that they see, and I'll throw this question back to you, is that one, they want it now, but two, the banks think that they're not willing to pay for this. And they don't know then how to monetize this. Now, my question to you would be, if there's not a value to it, to the end user, whether that's a consumer or a business, why would we pursue this? My personal belief is, I believe there is a value, and I think that to say that consumers or businesses won't pay for it is probably an assumption that's serving as an obstacle. So.
I'll take that lead actually, because there's two kinds of, I'll say, aha moments you'll have from real-time payments perspective. There's the immediate, yeah, so what? So it's emergency, I get it quicker, I get it now, okay, so all right. Emergency cash disbursements, or Aflac, pay because I need to pay my bill thing. Things like that. And so what you're really on the cusp of is that everybody talks about Uber. And they talk about Uber for a number of reasons, but from an app perspective, why does people talk about it? Because it's frictionless. You don't think about paying. It's not the topic of the conversation. So the customer journey and customer choice is the movement. And in order to create those user interfaces and those experiences, you need to have some form of instant gratification of exchange between value and monetary value for exchange for goods. So, for example, some of the areas that we've seen take off. So, by the way, push payments, just not a commercial, just an understanding, is that we do this today. We leverage other mechanisms to do it while the Fed's getting ready. and while the clearinghouse is getting up and rolling, we actually bring on banks ourselves too. So we're a bank processor, and we're not, I guess you would say a real-time acquiring processor. So we can go direct to the businesses, and what we've done is built channels and vertical markets where we found the validation and the go-to-markets that fit. And the first ones found us. Lending was the first one, the disbursements on lending. They found us in a heartbeat. And then, yes, there's a pay because I need the money now. $5, sure, right? And that's kind of, that's literally what's happening. And so then you have the gig economy spaces, right? Which is the 1099 workers, which is a huge market that's just exploding because our culture is changing. The way we work is changing. Millennials need jobs because they can't get a full-time, so they work a little bit here, a little bit here, a little bit here, right? But we all do that. This is the era of the entrepreneur, right? Everybody is becoming an entrepreneur. It's less people going to work for the bigger corporations and making it a lifetime job, like our parents or even some of us, right? So that whole idea of being, work is who you are is what's changing, right? And who you are. It could be what you like or what you do, but it's creating that environment. So what is it doing? It's creating this huge burst of the SMB marketplace. It's creating a huge burst for need for liquidity, because small businesses cannot live on pay me 90 days from now and I need to pay payroll. How do I manage that, right? And so that's what real time ends up doing for them. It provides them liquidity. So, here's some examples of products so we partner with organizations within these verticals that know those businesses, know those problems, and provide those services through that. It is an inline, baked-in service. The customer never really feels it. They just feel the benefit of it. And one of those would be instant merchant settlement. So you think about merchants, say a good restaurant in town. Anybody have an idea on we're coming up on Labor Day, a really good restaurant in town, what do you think they'll do in credit card receipts on one night? Larry, give me an idea.
You have dollars?
Yeah.
Oh, 50,000.
50,000,
Yeah.
all right, okay. So that's Friday. Friday night, they just had a $50,000 night, right? Long weekend, if it's that good of a place, it's probably the same way Saturday, probably the same way Sunday, right? Monday might be a little lower because it's a Monday, right? But so now you've just added up, let's say 150, maybe 175,000, not 175, it's, 175, can't count here. $175,000 that they made, that it's not in their account. They have to pay the waitresses, they have to pay their food, they have to go get more. It's not in their account, right? How long do you think it takes them to get paid those credit card receipts? On a long weekend, it could be as much as 5 days, right? and if on any weekend, it's at least 2. Well, actually 3 if you count the Friday. So, because they're patching out and they're sending those transactions in, and because the ACH process is what manages the settlement in between. So, we've got in and created a product that circumvents the ACH process and provides the merchant instantly cash. They get that 50 grand on Friday night, and they get that another 50 grand on Saturday, and another 50 grand on Sunday. So they don't wait for the money. What do you think that's going to do to our economy when we shove that much cash back into our economy, right? You don't have to be an economist to know that. So that's the kind of stuff that it really moves. It's a game changer, literally, in the sense that it makes a difference. So it allows processors to play on the same ground as a bank, because today that's who they really compete with, because a bank can get it next day. They can get it instantly. Bank can do it now instantly if they sign up. Zelle, if you think of Zelle, a lot of people think of that as real time. That's a P2P network, and it's really ACH, right? So the early morning runs that. They bought the clearing exchange, which was an old ACH network. It was ran by the banks. So in the clearing house, they're kind of like sisters and brothers, right? So one handles institutional stuff, and one is going to roll out a consumer product for the banks, right? But it's a banking network. So I've had people ask us,
could you maybe differentiate between availability and settlement with respect to Zelle, for instance? To the consumer, it looks like it's
to the
real
consumer,
time.
yeah. So this is the biggest thing that I understand. And there's this dichotomy, and I'll credit Brett King if anybody knows him. But I was in a little bit of a tit for tatter with him one day, and we were chatting about something. And he made a real simple comment, because I was saying, this virtual space, this idea of space that is kind of like the Venmo or even the Zelle solution, it creates this fake sense of reality. The reality behind the scenes, it's not really happened that way, so people don't understand, right? And I was kind of advocating for the raw truth. I'm kind of a purist like that. And so, and his old eyebrow thing goes, or is it? And so the whole point is I had made a comment, it's not a reality, and he said, or is it? And from that point forward, that was like 2 years ago, I'm like, he's got a point, because perception is the reality from consumer. So there is a huge separation of what they feel and what they see and what they expect for what's really going on in the back end. So that's largely why we launched when we did, because we knew we could create an environment and a quick time to market We use card networks and different ways of doing it today before it really gets you. And then I'll take the risk of that liquidity position we're talking about. And so that's just a business decision to make. But the bottom line is that those transaction types get embedded, and there's use cases all day long. I can sit all afternoon and show you ones that you would have never thought about. Because you know what? I'm not an expert on business cases. I'm an expert in payments, not in business cases. So people can come up with new models every single day. But there's always a way to tie those in to make it better for them. So digital wallets and the blockchain space and conversion of fiat and back and forth and be able to get it to accounts. Offloading from prepaid accounts to, waiting for the download, if you will, right? So, account there, you can move it to the bank account. There's spend on wallets. There's so many opportunities. Here's one I bet you wouldn't think about. Anybody drive down the road afternoons and ever see a tractor trailer sitting on the side of the road and wonder why the heck they're sitting there? There might be a warehouse around or something like that. 9 times out of 10, they're sitting there because their boss told them they can't leave until he gets paid, because they're waiting for the ACH to clear, and he's not allowed to leave and drop that load off. Sounds silly, right? But that guy's probably wasting a day or two just sitting in his daggone truck sleeping when he could be doing another load or back at home, right? We don't realize we've spent years building around rules that have been established. Here's the chance to wipe those out and establish our own in a virtual space and interconnect to that digital space. So the banks have theirs, and they're going to deliver through the clearinghouse, through the Fed. That's one end of that solution. Zelle is just an ACH product made look like something, and it's not. But because they are, wink, wink, I'll pay you tomorrow. Well, I think Chase is probably good for it. And so, but the reason why people are here is because there's a huge amount of work to get done at the Fed level. And, you think of IBM. So, Craig, what is one of the big sectors, that you guys are going after, and why you're involved in that?
Well, the thing that makes it interesting, and the thing that makes it interesting to everybody in the room here, is that real-time payments is an enabler. You think about it, it's an enabling technology for a much bigger user experience. You're talking about the truck drivers there. Think about ships that you're going to dump grain onto ships. So the cost, the payment is variable, right? So you have to allocate funds for what you think might happen. Well, now with real-time payments, you can pay exactly what you need to pay, exactly when you need to pay it, and you don't have to allocate those funds. There's that kind of a model. There's models where in Singapore, when Fast went online, the traffic was low, as you would expect, and all of a sudden there starts to be this big spike. And when that was analyzed, what was found out is an innovative financial institution said, I'm gonna offer a service where I will orchestrate with real-time payments, pulling money out of someone's account, putting it in an overnight investment account, and then putting that plus the investment dollars back into the next day. You can do that kind of thing now. That is the way. That's what you need to take away from immediate payments, is the use cases that type of a system can now provide you. And what does that hit? If you're going to do a faster payments around the world, IBM has basically not a commercial, but WorldWire, and there's other blockchain-based things to do cross-border payments in a shorter amount of time with a lot more transparency. So blockchain and global networks come into play. The gentleman talked about PSD2. The world is moving to an API economy. You think about Internet of Things. And again, I always go back to user experience is king, right? The way that you as institutions can enable that is via APIs. And now with payment embedded into the process, people can now not have to think about payment as an extra step. Just go ahead and pay it. So how many industries does that hit? Every one of them. How many institutions does that hit? Every one of them. So where is IBM playing in the financial services space? That is in a nutshell why IBM is playing in this space, because it hits every single segment, every vertical, every horizontal that there is. It truly is a game changer when you think about when you take it above and beyond into that user experience, and like you said, I could talk all day about different use cases around this stuff, well beyond P2P.
So think about this. What is the one common theme on the use cases that we've mentioned? Solves a real problem. Number one rule of business, you got to solve a real problem, right? We're solving a real problem. We've created an image that thing just happens seamlessly and easy without any friction. There's a lot of hamster wheels running in the background, right? And so this fixes the hamster wheels. And so that's really the movement is about. It allows you to really build those things. So, there was a question that was posed, and I want to let Gail field that one. It was kind of like, so this is a mobile payments conference. Why does this matter, right? You want to take that?
Yeah, so one of the questions that I'd said, so why talk about real-time payments at a mobile payments conference? Obviously, the mobile device has so much to do with respect to user experience, but I actually think, and I forgot to bring mine up, so I'm going to grab his phone. I actually think that this is the device that sets the expectation that whatever you do here is immediate, it's real time. If I do something on this phone, I expect it to take place right now. I don't expect the check to be in the mail and to be deposited in 5 days. So I think it has everything to do with mobile. It's the enablement. You get beyond the user experience to how it actually takes place.
And it's not the tech. It's the age-old story. It's not the technology. So it's cool. Okay, it's how you use it.
Yeah.
Right.
I've got pawn shops are protecting their customers because they're not walking outside with cash, right? We've got same scenario, waiters and waitresses. We have restaurants that are carrying 2 to 5 grands of bags a day into their restaurant. And at 1 o'clock in the morning, somebody's daughter's walking out with 200 of it in her pocket. That's a safety issue, right? So there's little things like that. And there's a behavior. If you're stalking that guy and you're casing them, you're going to see that behavior. They become targets, right? So we talk about fraud and all these other things. This solves those problems, right? And so it's so fast that there's not fraud in that respect. Now, it changes the whole game when it comes to identity. So that means, and here's your next kind of opportunity, is that real-time payments will drive the digital identity market to set it on fire, because the biggest rule of fraud and controls is that for the banks and the processors and like to validate who can do that, because I'm like handing you a machine gun that shoots money. I mean, in milliseconds, it can fly out the door and there's no retrieving it. All right, so it's like handing the guy that you thought was one. I heard a story. Who heard the story about the lady that dropped her towel the other day? About Count,
Yeah.
I think it was. I thought it was funny. It was hilarious because it's kind of the same scenario. Because if you gave the $500 to the wrong person, then whose fault is it, right? And so that's kind of, it does put a little onus on a different way of thinking, right? And so this gives you that capability. So I know my time's up, but I think it's about taking a tool and using it for what you can do it. And there's tons of opportunity out there. So thank you, everyone. Thank you for joining.
Thank you.